Okay, so first of all, welcome to the panel. We'll start at this end and do a quick intro. And I think what's really interesting when we put together this panel was that the view was that we end up having quite a broad set of individuals from different backgrounds, which makes it quite an interesting view. We've obviously got advisors, investors, operators, people who do a bit of both, and I think there'll be a really interesting opportunity to get some killer information out. So start off with Ramzy. Ramzy, do you want to introduce yourself to the audience?
Sure. My name's Ramzy Abdul Majeed. Big on hospitality as a company that we see ourselves as having been pioneers in this market back from the 2007-8 days. We created a whole raft of brands created in Dubai. We felt that there wasn't necessarily a need to franchise internationally and bring in. We felt that we could create brands, run them ourselves, and then go down the franchising route where we're the franchisor. And that's exactly what we've done. So the two sort of, I call them power brands that we've done are Oku, the high-end Japanese, which I am pleased to say will be reopening its flagship in Dubai in February next year on the Palm, but the location is being kept quiet as much as possible, although I'm sure it will leak. And the other one is Claw Barbecue, which is really a mid-range monster that ticks a lot of the boxes that Craig was talking about, of the experiential, Instagram, fun type venue. We've just actually, we're very proud to say, with our partners at Al Musa Arenco, we've just opened a fantastic unit, a monster, so to say, on the Palm in the new Hilton Resort. In only the first week of operation, it opened on Monday last week, we've had about 2,000 people walk through the door. So that's quite testament to the power of the brand. And also proud to say that in a few days, not too far away from here in JBR, we're opening our new flagship in JBR, which is another monster. So fantastic to do those, and pleased to be on the panel. Thank you for having me.
Congratulations on both of those. Look forward to coming and seeing. Ashton, we'll move to you. If you can give a quick intro of yourself and what you're investing in and your background.
Sure. I'm Ashton Crosby. I think when you said diverse, I look at this panel, I think it's a real privilege to be here, and so thank you guys for participating, and thanks for the invitation. Not just diverse because I'm American, but living in London. So we have a private equity fund that is a sector specialist restaurant fund private equity investor. So we started the business about 4 years ago off the back of a very successful fund my partners built in the US called Capital Spring. They deployed about $2 billion, completed 200 restaurant transactions across 65 different brands. And the common theme there was good quality, fast, convenient, affordable food, embrace technology. They sold that business in 2015 to Partners Group, and I got together with the former co-founder and former chairman of that business and a 25-year branded restaurant chain operator who spent most of his career at all the big US chains, so Starbucks, KFC, Pizza Hut. He was GM of Europe for Krispy Kreme, you name it. So we're a very operationally led, value-add sector specialist investor. In the UK, we've got 3 investments currently. The first deal we did was Wasabi. It's a sushi and bento chain, about 50 sites, 5 in New York as well, primarily London. Great quality food, grab-and-go model, so super fast, speed of service, and very, very compelling price point. Kind of the opposite to what Ramzy does. We like really small boxes, high volume, low price point, fast service. We did that deal in 2019, partnered with the founder, and bringing a lot of operational rigor and helping grow that chain. Our second deal we did in the middle of COVID, where we acquired the master franchise rights to the world's largest Japanese udon noodle chain. It's called Marugame Udon. They have about 1,800 restaurants around the world, part of the Toradol Group, primarily in Japan, but then also rest of Southeast Asia and in the US. So we've got the franchise rights to 42 countries across EMEA for that. And we did a joint venture with the parent company. And then the third deal we did was a coffee bakery chain called Gales. Started as a manufacturer of very high-end quality bread, selling it to Michelin-starred restaurants. Soon pivoted that into a much wider wholesale business and as well a retail business. So that's about 90 sites, primarily London. Again, excellent quality product, affordable price point, and pretty fast speed of service, although we're trying to speed it up a bit. And also launching online and starting to do more delivery, takeaway, click and collect, things like that. So we've got 150 restaurants, primarily UK, but we're a pan-European strategy, and we like to invest between 15 and 100 million of equity in our deals. I think that's about it.
That's great. We'll pass over to you, Mohammed.
Yes, hello everyone. I'm Mohammed Jawa from Saudi Arabia. I have 20 years of experience operating restaurants in Saudi Arabia. And we have been always creating the market and trying to create the new eras in the market and attracting international operators, the best international operators, and helping them to navigate their way into the Saudi market with our local expertise and infrastructure, and also developing homegrown restaurants or semi-homegrown with international expertise. And that's what we do. And now with the great boom that is happening in the Saudi market, and we are all proud of it. We've been waiting for it for a long time, and today we are in it. So we are even more aligned with international operators that are keen to come to Saudi, and we have partnerships with them with the support of many of the investment behind this from different parties, government, semi-government, and individuals, and whatever. So thank you very much for having me.
Well, thank you for being here. We'll stick with you for a moment, if that's okay. And the Saudi market is quite incredible, right? I think that I was there recently for the FHS in Saudi and got to see some of the new schemes that are being developed. And I mean, it makes lots of other places in the world, the vision and view look quite narrow, it's got to be said, and there's a lot coming. But what's really interesting is that I think for the past, I guess, 4 or 5 years, people have been talking about Saudi being the next big opportunity. But a lot of people just don't really know where to start. And I guess that's what you're trying to overcome by becoming this kind of link and an opportunity. So can we drill into a little bit about what you're offering? So you're investing, are you operating? What's the basis, and how are you doing those deals?
Okay, so basically it has always been the opportunity, Saudi. It's not just now, but for us, we believed in the market 20 years ago. And we are operators. We started as operators, and till today, we are operators, and now we are operators and investing as well, both. Now, how we attract the international operators, the market is there. We had many businesses or restaurants we opened previously, like 7 or 6 years ago, and even now, which the performances were shocking for us and for international market. In a market like Saudi, which is not really exposed to the world in terms of the restaurants. And that's what I would love to share, with every international operator, and that's what we do. So numbers speak, the factors speak, the dynamics. And then the Saudi client is the client of all these restaurants around the world, all around the world. So we know the restaurants. All we need to do is get it at their doorstep. That's it. Of course, our local knowledge and the way how to get the execution part in, there is no formula. It's just we do it. That's what we think about. We just get it done and make sure we get it done. And that's what operators want as a local partner in Saudi.
That's great. Thank you. I'm going to turn to the two gentlemen on my left here, because it's fascinating that we couldn't really have picked two people on opposite ends of the scale in terms of what you're investing in and what you see as being investable, right? And I think that's really interesting. I think when you speak to a lot of kind of bigger mainstream investors right now, they're definitely taking your view, Ashton, around the whole, actually it's got to be simple, probably QSR, almost certainly fast, a small box, low overhead and so on. So on that basis, I'm going to come to Ramzy straight off and say, the numbers you gave me a minute ago down there about the size of your units, seem quite nuts. So I'm sure you're very sane. So on that basis, talk through your thinking when it comes to these investments.
Well, we're not complete lunatics. Some might say otherwise. The one on the Palm is a 392-seater, 13,000 square feet. The JBR one is 14-odd thousand square feet, 420-odd seats. So yes, they're very big. But effectively, largest sports bar on the Palm, largest sports bar in JBR. Great dive bars. Food is great quality. Average spend is only 200 dirham a head because the portions are big. So we're going for that very experiential type of outfit. Claw barbecue by definition is not just the bar. There's great food. There's a lot of games. We don't charge for any of the games. There's pool, there's boxing, there's foosball, there's beer pong, there's a whole bunch of stuff. So we put pinballs and everything. So you use up quite a lot of space. We have a big private area. We have a rodeo bull, which is kind of unique, and people love getting on it. So we go down that experience. So you need big spaces, and you need volume, but it's about that vibe. And what we've tended to see in Dubai is there are an awful lot of places that are opening up that are just super high end. Having said that, we're going to reopen Oku next year, but there's a gap missing in the market. There's some great high end that's opened since we opened Oku. There are a number of very exciting new brands that have been created in Dubai and going internationally. There's a huge amount of small QSR that's super successful. That mid-range, though, has never really been attacked, and that's where we're attacking. And so that's why we've gone down that route, and we're expanding that brand. Having said that, we are also doing some of the stuff that Ashton's doing. So we're taking a Jordanian brand, Kalha, which is a hummus full falafel thing. Very low spend. In fact, we're positioning it into Saudi with a group. We're looking at opening 75 to 100 over the next 10 years, starting, sort of 10 a year. That's kicking off now with a group there as a joint venture. And those ones, a family of 8 can eat for less than 250 riyals. So we've gone to the B- C+ market in Saudi. We're not looking at the super high end other than the Oku that's been open there 4 years. So I think there's lots of opportunity in both. We've tended to be a little bit crazy because we don't just focus on one thing. We've got a number of different channels into the market, and I think both have a strategy. I think fundamentally what it comes down to is who's running these. So if it's set up properly and you have a clear business model and the foundations are correct on which you're building it, and it's a product that the customer likes, and you have a good operational team and good partners like Mohammed and others in Saudi, you can make a success of it. But any one of those that doesn't tick the box, the business will fail. So you have to be very careful how you focus on those. But if you tick those, which obviously Ashton and Co do very well by making sure that they are ticking those boxes and they are run operationally very sound, then the business should be successful.
That's really great, thank you. Come to you, Ashton. So the three businesses you highlighted, really quite different, although in lots of ways quite similar. So I think we've covered that off. What is really interesting with that, though, is that I know a number of the key people in those businesses. You bring in fantastic leadership, right? And you make sure that you're backing brilliant leaders, which I think is a really integral part of the success. But if you had to pick up 2 or 3 more factors to you that make something a fantastic proposition in a business that you think is backable, what would it be?
3? Tough. I agree with what Ramzy said. The restaurant business is like you're juggling 25 balls constantly, and you can't drop one of them, right? Supply chain. Look at what happened to Chipotle. You've got to be great at property. You've got to be great at food. You've got to understand pricing, margin. Training, people, health and safety, standards, like you name it, and you really cannot be bad at any of them. You have to be excellent at all of them. Brand building, it goes on and on. So I really can't name just 3. But if I took perhaps Gales as an example, so that's our most recent deal, end of last year, UK coffee bakery chain. We actually did that deal in partnership with Bain Capital and Henry McGovern. Some people in the room probably know Henry. He's the most successful restaurant entrepreneur in Europe. He built a business called Amrest from literally a single, I think it was Pizza Hut franchise in Poland, to over 2,000 units, and it's a publicly traded business in Europe now. And what we all really liked about Gales was about 5 or 6 key factors. So gap in the market, huge opportunity to expand. Gales has 90 sites currently. The next biggest, I guess, vendor of pastries is Pret, effectively. They have 400 sites. And then there's a behemoth called Greg's at 2,000 units. And that's the entire coffee bakery market in the UK. I exclude kind of Starbucks, Costa, Nero, because they're just coffee. This is bread, this is bakery products, and a few ancillary products. So imagine that market in just the UK. We're at 90, the next guys are at 400, and the next guys are at 2,000. And the guys at 2,000 are extremely low quality, very, very low price point. And so we feel like there's a huge gap in the middle there, and we're attacking that gap. So something Ramzy and I do have in common is we look at gaps in the market and figure out a way to fill them. We do it by investing, he does it by operating or inventing. But so I think that easiest thing is start with a huge opportunity, and then you've got to really focus on how good are the single unit economics, right? So you open up a 4-wall unit, how fast can you pay yourself back, right? We focus relentlessly on return on capital employed. And Gales has exceptional return on capital employed metrics. So then the last question is super simple for me. How good's the team and how fast can they go? And that's literally like how I break down restaurant investing in 3 easy steps. I just thought of that, by the way, earlier.
That wasn't pre-planned, so good on you. The one for you, Craig. You mentioned the franchise piece. And I know we had this conversation that almost at every GRIF that there has been until last year, we had the equivalent panel of this, of investors standing on stage saying, franchise isn't important, and if you go down a franchise route, then PE wouldn't be interested anymore. And the reason for that, we were always told, was that the issue is that we need to invest large amounts of cash. That's what our job is. The franchise model doesn't allow for that. What you've said and what I'm hearing and what we're seeing from this panel is that that's almost turned on its head, right? What's happened?
Yeah, I think that's fair. And I think they've just wised up to the presence of high quality franchise partners. Ultimately, I think it was a little bit of fear of the unknown, and certainly over the last 3 years, there's been multiple instances globally of high quality brands dominating in a market where it's being operated by franchise partners. And so it's just much less risk than it was previously because there's good people out there.
I think there's to add on to that, I think it depends on the specific sector you're looking at. So, there are some fantastic franchises around the world. So, yes, I think it was more the investors being a little bit up themselves that, they know what they're doing better than the franchisee or a franchisor to invest. There have obviously been lots of people with bad experiences with that, but there is an element of saying, well, when you get the franchise, if it's run properly, it can actually, if it goes, especially in this part of the world, if it goes into hotels, hotel operators, I think, have seen that external franchises, and we're one of them, there are others, can actually significantly increase the top line and the bottom line. And everybody then benefits. We get a higher royalty, the owner gets more profit bottom line, the hotel operator gets a better return on their HMA because there's a higher revenue, higher profit. So there's definitely that element. But I think the other angle is not just the franchise that you mentioned earlier. I think there's also a manchise model that we're now seeing, where people are saying, okay, well, I'm trusting you as a franchise, but I don't necessarily just want my people to run it. I'm bringing you because you understand the brand. So can you also be involved in some way in actually running it? That also adds value, where franchisors are saying, okay, I'm not just looking to take a small fee of the top line, but now I can actually get a bit more by being involved, protecting my brand, and helping deliver a better business.
Franchising is the smartest and most capitally efficient way to grow a restaurant chain globally. I can't believe investors were up here saying that was a bad idea. That just means they're undisciplined with their capital and probably had too much capital or raised too much capital, right? I mean, someone else takes your brand, as long as they, can execute, operate it well, they're risking their capital to grow your brand. Like, there's a reason, McDonald's, KFC, Yum, RBI, these guys trade at 30 to 50 times EBITDA because their return on invested capital is like north of 90%. Who wouldn't want to invest in a business like that?
And we see a lot of those in the region, right? Some of the biggest companies in the region, whether it's the Americanas or the others that have brought these international brands in, they're not doing it because they like the brand. They're doing it because it's a business.
Al-Shaya.
Al-Shaya is a great example. It makes money. Starbucks now, with the massive sale of the stake they're looking at and everyone vying to get into it and the PIF seeming to be the lead runner to pay almost anything. Shaya's about to make a lot of money. So, there are big groups looking at that. Franchising is definitely a great way to move forward.
And I think as well, it's also about, with the franchise piece, the question is not just franchise, not franchise. As you say, there's the manchise piece. We're also seeing in the UK, you look at some of the biggest successes from North America and it's joint ventures rather than straight franchises. I mean, there's lots of way to go. We're running out of time and I would be kicking myself if I was down there for sure. So I'm just going to let you have the finishing word.
I have one point, yes. Look, James, also listening to Greg and the great keynote. I think the most important thing, whether it's franchising or not, the investor or the partnerships that you have. Today, if you have, I'll tell you as an operator, if you have an investor who's looking at the bigger picture and a long term and is always keen, this is, as an operator, will always give me the confidence to build the right thing without just building. And this is example like the relation we have with the Tourism Development Fund in Saudi. The idea is building part of the tourism through restaurants, and that's a long term. It only gives us the confidence to do it and do it right instead of just doing it, because that's something also we are underestimating in the world, and unfortunately now in the restaurant industry, that yes, we are building, but we need to make sure that still it needs to be good to go to, or no one is showing, no matter what analysis we can do, if the food is not right, the service is not right, the atmosphere is not right, there is no point, no matter what we do as in the room and analyze, at the end it's a restaurant. It's a basic form and simple form of service and happiness. So a strategic partner to help you in looking at the long term and to guide you and navigate you through that and give you the confidence and to be behind you, that's the partnership that you should look for and not look for something else, just the money. Even if you have to wait or stay even at your size, but it's better than going out of your place and doing things wrong. That I wanted to add as well.
I think a great finishing comment. I know that most of the gentlemen here will be joining us for the evening, so do come and collar them, ask them your questions, but thank you for now.
Thank you.
Bye-bye.
Thank you so much.